Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because Bitcoin just broke above $120,000 for the first time ever. And it's crazy to think that just under a week ago, we were talking about the global liquidity index hinting at a bullish July and August, and how somehow it still hasn't failed us this cycle. And what do you know, just a few days later, Bitcoin breaks out, enters price discovery, and seems to be following the roadmap that's been laid out by the global liquidity index quite closely. We have the crypto market cap as a whole making a new all-time high at $3.8 trillion. We have Bitcoin flipping Amazon's $2.3 trillion market cap. And now I'm not sure if it's going to be able to move much higher this cycle. Apple, Microsoft, and Nvidia are moving targets, so it's going to be hard for Bitcoin to catch up, but reaching top 5 this cycle is still incredibly impressive. Now, we do also have to acknowledge the weakness we've been seeing from the global liquidity index recently. It's too early to call this a downtrend, but it is the biggest drop we've seen in this uptrend that we've been in over the past few months or so. And this is being driven by the bounce we're finally seeing in the US dollar index. Now, a lot of these bounces have rolled over in the past, so it's too early to say the bottom is in, or at least the local bottom is in from the US dollar index. But this recent strength in the US dollar is coming from the fact that rate cuts have been pushed back once again. It looks like there's almost zero chance of rate cuts in July, which we already knew. But now September, instead of being almost a guarantee for rate cuts, is essentially a 50-50 coin flip as of right now on whether or not the Fed will cut rates at that meeting. Now, this is mainly driven by the inflation print that we received this week. Inflation is still kind of heading in the wrong direction and is still closer to 3% than the Fed's target of 2%. So they don't have a lot of reason to cut rates here, especially with the unemployment rate still flat at around 4%. GDP still positive at over 2% based on the Atlanta Fed's forecast, and the recent strength we've seen from risk assets. It's very hard for the Fed to justify rate cuts here when you have the S&P 500 breaking all-time highs and now Bitcoin breaking all-time highs as well. So we'll continue to monitor this closely. If this does become a downtrend, I'll take it as a major warning sign for what's to come for Bitcoin in around September. But July and August, we should still be in the clear, and Bitcoin should still have room to rally higher. And now, taking all of that into account, what changes have I made to my portfolio this week? I took profits across all 3 of my holdings, and it felt so great being able to do so after watching the market do nothing and go sideways for the past 2 months or so. And if we see another big move up this week, I will happily lock in more profits once again. And if we do end up seeing a correction here in the short term, I'll be happy knowing I locked in some profits at higher prices beforehand. So it's a win-win in my book. And as always, if you'd like to learn more about my portfolio automation system or mental models I use to navigate this market, you can check out the Crypto Enjoyers program in the video description before the price goes up at the end of this week. Now the mental models course is finally complete, and I have one of the mental models as well as reviews and the first part of the portfolio system on the about page if you're interested. But it is definitely great finally seeing Bitcoin above all resistance levels here, and this is exactly why Monday's free weekly report was called Price Discovery. Now that Bitcoin has entered price discovery, there aren't really any good support or resistant levels to strategize based off of. All we can do is sit back and let price action develop and try to focus more on zoomed out larger time frame charts like this one for general strategy and profit taking. And so far, we have been spot on in expecting the early cycle scenario where Bitcoin sees a breakout in the summer, mainly because of the price action we saw going into June and the seasonality we've seen from July historically. But August is going to be a bit trickier because although it has very solid returns in post-halving years like 2021, 2017, and 2013, it's also had some very terrible returns in non-post-halving years. So it's hard to know if it's going to play out like those previous post-halving years did. So we'll use things like price action, liquidity, and sentiment to try and navigate that. I will make an updated version of this how low will Bitcoin go chart once we finally see some consolidation and some signs of a pullback, but we really don't see anything like that right now. Sentiment hasn't even gotten too crazy yet. we're still very comfortably in the greed region. But the way things are looking right now, I wouldn't be surprised if we entered extreme greed very soon. We're still maintaining our trading range breakout that we had last week, and it seems to be seeing quite a bit of follow through. We're still seeing incredible ETF inflows trickle in even at these elevated prices, and we're still seeing strategy continue to buy more and more Bitcoin and take that supply off the market. And as of right now, we do have Bitcoin at the upper end of our expensive region, and this is a moving target as the 200-week moving average continues to rise week after week. I am very happy taking profits at these price levels, and will take profits more aggressively once we enter the very expensive region. I know there are still a lot of people relying on various on-chain indicators like the MVRV score and are waiting for Bitcoin to enter the red region before trying to sell everything at once. But I don't see enough people talking about the diminishing returns we've seen in this indicator and how in 2017 it made it all the way up to 11. In 2021, it only made it slightly above 7. So maybe this cycle we only make it slightly above 4 or perhaps high 3s. And this makes sense because this essentially divides the market cap by the realized cap. And when you have these insane multiples like 2017, it's very easy for the market cap to get way higher, as profit taking takes a lot longer to occur when the multiples are that large. But as those multiples shrink more and more every cycle, it's going to be hard for that MVRVZ score to get anywhere near as high as it's gotten previously. And speaking of getting a lot higher than it has recently, Ethereum has to be one of the best charts in this asset class right now. This has been an incredibly difficult asset to hold, and we talked about how a weekly close above 2,800 would target 3,400, and we're almost there, and a close above 3,400 would make us target 4,000 soon after. Right now, Ethereum is getting a ton of attention because it's been seeing these huge ETF inflows day after day. We're seeing more and more announcements from Ethereum treasury companies and how they've accumulated more than 545,000 ETH. Now, the size of these treasuries and these purchases pale in comparison to what we've seen from Bitcoin, but with how bad sentiment has been on Ethereum and how bad the narrative has been, it does seem like many investors are getting caught wrong-footed on Ethereum here. And as always, you can't have bullish sentiment and excitement without these insane price targets starting to get airtime to get people excited, like Ethereum could hit $1.5 million per token over time. Or this one that says Ethereum holding 3,000 opens the door to an 1100% vertical phase. And I'm seeing this fractal posted all over the place showing how Ethereum is doing something similar to what Bitcoin did in the previous cycle, and that's pointing to an 18,000 Ethereum. Now, believe me, I would be incredibly happy with this if it played out, but I'm not going to be holding my breath for a 20k ETH this cycle. As for the Ethereum Bitcoin pair, it looks like our cup and handle formation is breaking out, and it seems to be headed to the 50-week moving average. And it's nice to see Ethereum finally taking back some market share from Bitcoin. As for Solana, still trying very hard to close above our range mid and 50-week moving average as sellers keep taking profits at this level, but if it does, we probably head to the range high at $202 very quickly. It looks pretty solid on its Bitcoin pair as well. We've put in a higher low after putting in that low back in about June of this year, and it looks like it wants to break higher on its Bitcoin pair as well. So we'll see what happens, but as of right now, it's great to see Ethereum and Solana finally rallying higher, and hopefully they can slowly but surely catch up to Bitcoin. And as we look forward at the longer term, the federal government is still running huge deficits. That trend seems to be worsening, especially with the passing of the big beautiful bill. Exponential debt growth means exponential money supply growth, and that should devalue the US dollar and other fiat currencies, which should be a tailwind for our risk assets like the S&P 500 and our fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.